In our previous video, we introduced the 4 pillars of property management, which are financial management, technical management, ownership management, and social management. In this video, we want to dive deeper into the first pillar, financial management, and focus on what are the key financial reports that you must have. Managing a high-rise condominium, office building, or gated community involves managing a common pool of funds. Because of this, you must keep proper accounts of all income and expenditures in order to report to your stakeholders. It is like managing a company. Would you run a company without keeping accurate records of how much you have collected, paid out, sold, or purchased? You need to have your company's financial status at your fingertips so that you know whether your business is performing well or it is actually in some financial troubles. So, whether as an elected committee member or as an appointed property manager, you have a grave responsibility to make sure that the accounts are kept up to date and audited by a professional audit firm every year. In fact, the Malaysian Strata Management Act of 2013 holds the committee members personally liable for this, with hefty fines and even jail time for violators. Section 26 Duties of Joint Management Body in relation to accounts. A joint management body shall, in respect of the maintenance account and the sinking fund account, A. Cause to be prepared such accounts and records of accounts as will sufficiently explain the transactions of the accounts and enable true and fair balance sheet, income and expenditure statement, and profit and loss statement to be prepared for the period starting from its first annual general meeting. B. Appoint an approved company auditor to carry out the audit of the accounts annually. 5. If the joint management body fails to comply with subsection 1, 2, 3, or 4, every member of the joint management committee commits an offense and shall, on conviction, be liable to a fine not exceeding 250,000 ringgit, or to imprisonment for a term not exceeding 3 years, or to both. Section 62 Duties of Management Corporation in relation to accounts. The same requirements are imposed on the committee member of a management corporation. From our experience after working with many property managers and committees throughout the country, it's very sad that we still hear of places with no properly kept or audited accounts. And oftentimes, the funds would have been misused or misappropriated by dishonest people who saw the opportunity. Furthermore, whoever takes over the management will usually face a hard time turning the situation around. Ultimately, the owners become the victims because their property falls into a worsening condition. So how do you ensure that you have proper accounts?
You start by making sure you have these key financial reports. First, receipt and payment report, cash flow statement. Second, income and expenditure statement aka profit and loss statement. Third, balance sheet. Fourth, bank statement. Fifth, bank reconciliation report. And lastly, debtor aging report. Now let's go through each of the reports, one by one. First, receipt and payment report. This report shows you how much you have actually received and paid out. In other words, it shows you the monthly or yearly cash flow. It should also include a list of all payments made in that period of time. Use this report to monitor the cash flow. If your payments exceed your receipts, it means you are tapping into your reserve funds to pay your creditors. If this situation is prolonged, you will end up in a very desperate financial state. Second, income and expenditure statement. It is also known as the profit and loss statement. Sometimes, this is confused with the receipt and payment report. The difference is the receipt and payment report captures the actual money in and money out, whereas the income and expenditure captures the billing and vendor invoices in a given period of time, regardless of whether it has been paid or not. This is important to ensure that you have recorded all sources of income and all sources of expenditures as it occurs, so that you have a complete picture of your financial health. Of course, you want to keep your total expenditures lower than your total income. Third, balance sheet. The balance sheet shows you the complete financial status at any point in time. It tells you important things like: first, how much you have in the bank in cash in hand. Second, how much you owe to creditors. Third, how much is owed to you. Fourth, how much advance payments you have received. Fifth, what are your fixed assets? Sixth, how much is your surplus or deficit accumulated over the years? And lastly, how much is your sinking fund? Fourth, bank statement. An official bank statement will be provided by your bank, and it shows the actual amount that is in the bank. It should be attached together as part of the monthly report so that it can be cross-checked with the information on the other financial reports. Next is Bank Reconciliation Report. Bank reconciliation is a standard accounting practice to make sure that the transactions captured in the accounting ledgers tally with the actual in the bank statement. This is extremely important to ensure no money is misused or misappropriated. From our experience, whenever bank reconciliation is not done, money has a tendency to go missing. So you must have the bank reconciliation report every month to avoid this problem. Doing bank reconciliation is a very tedious and time-consuming exercise, and many property managers lack the accounting staff to do it in a timely manner. The problem is that the longer it is delayed, the harder it becomes, due to the sheer volume of transactions that have piled up over the months. For sites with a large number of transactions, bank recon should be done on a daily or weekly basis so that it is more manageable. Lastly, debtor aging report. This report shows you who owes money. Review this report every month for credit management and take the necessary action against the defaulters, whether it be sending soft reminders, blocking the access cards, or taking legal actions.
So, there you have it. These 6 key financial reports will help you manage the finances of your condominium, apartment, office block, or gated community. Some property managers will present the receipt and payment report only in their monthly report. However, all the best professional property managers provide all 6 reports every month in order to be fully transparent and accountable to their clients. In our next video, we will talk about the challenges that property managers face when doing the accounts. So stay tuned, and thanks for watching.